So last week, we had an analysis of the monetary policy rate statement by the Bank of Botswana, in which they have upheld permanent rates at about 5.5%. I think in the preceding week thereafter, there was a press briefing in which the Bank of Botswana had announced that it had posted a 5.2 billion pula profit, and that foreign reserves were actually up, and government had actually paid back an advance that it had gotten from the central bank. And the headlines in the local newspapers are telling us that everything is just fine. But let's unpack this just quite a bit. Good morning. The name is Kiloko Twafitsi, one of the voices of economic intelligence between Botswana's space. Now, in terms of the backstory, let's go back just about a year ago. Botswana's government savings account that I held with the Bank of Botswana, called the Government Investment Account, or the GIA. It had just about 42 billion pula in 2015, and then by last year, September 2025, it had less than 500 million in it. 10 years of budget deficits had drained it to almost nothing. So ideally with you and I, when your savings run out, what do you do when you need to pay your bills? You go borrow from whoever you can. So similarly, the government is doing the very same thing. So in November 2025 last year, the government actually tried to raise about 10 billion pula by selling bonds and treasury bills in the market. And the following month in December, it had only raised 3.1 billion pula. That is quite a big gap. And the market was actually not buying at the rates that government wanted to pay. So the government did something that it had done before, but it did it quietly. It went to the Bank of Botswana and actually asked for an emergency short-term loan of about 2.8 billion pula. Now, that facility is actually legal under the Bank of Botswana Act, and it is limited to only 90 days, and there is a cap on how much can be borrowed, but it is a signal to us in the market. By March of 2026, right, this year, government could still not fill up that gap between the 10 billion and the 3 billion that they managed to get. So for the first time in Botswana's modern history, government then borrowed from the local commercial banks in foreign currency. So that is to say dollars and euros. And they did this from Stanbic Bank, Standard Chartered, ABSA, and FNB, approximately 14 billion pula. Now, some of that money costs close to 13.7% interest per year. And some of it is in currencies that move against the pula, which means that if the pula weakens, the debt gets more expensive. So the following month in April, the Bank of Botswana made another advance to government, and the balance sheet actually showed about 3.2 billion pula outstanding by the end of March 2026. And this is something that we do need to consider. There was a bit of good news in this period, whereby the SACCO receipts did come in, and the diamond sales in quarter 1 of 2026 were actually just about 9 billion pula, which is much stronger than the same quarter in 2025. And government had that cash again. It repaid the Bank of Botswana advance, and the bank actually posted the 5.2 billion pula profit, mostly from the investment returns that it has on the reserves that it manages, right? And overall, they transferred just about 7.3 billion pula to the government, which is more than double what they paid in 2024. Now, reserves are currently sitting at close to 59 billion pula, which is about 6 or 7 months of import cover, and that is what the headlines are currently celebrating. Now, where I need us to peel our eyes is here. The 7.3 billion pula that the bank paid to the government largely refills a deficit or an account that was largely empty a year ago, and is not a new wealth altogether. It's mostly just the recovery. The budget deficit for this year is projected to be close to 27 billion pula, and government needs to borrow close to 33 billion pula in 2026-27 alone. The debt ceiling at the same time has been raised from 40% rather to 60% of GDP, and foreign currency loans from the commercial banks carry exchange rate risk that has not been publicly modeled for us. So the reserves recovered because diamonds and SACCO receipts came through, but neither of these are in government's control. And if diamonds actually start to crumble again, or the receipts don't come in from SACCO, we are back in the same position. So in essence, we have had some good news in which the Bank of Botswana did manage to get its advance back. That is the truth. But the conditions that had made it necessary for government to have even borrowed in the first place have not changed, which is also the same truth. So we believe that these two should form part and parcel of the same connotation that is being relayed out to the public, so that it informs on trust, transparency, and the principles of key governance across our financial institutions. And we would be speaking more onto these as the weeks go by. Have yourself a good day and good morning.